stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
There's a couple of number one strong buys that we want to bring to your attention. At least Steve Reitmeister and Eric Dutram do, because they're here to talk about their top picks, and they're both number one strong buys. And Steve, you going to start with a scientific and technical instruments company.
Yeah. MKS Instruments, it's a player in the semiconductor field. They make more of the testing and equipment that goes in. So let's just set a backdrop. The world economy is expanding, in particular Europe is kind of waking up from their slumber. That's good for the technology field, and in that, the semiconductor group is just doing terrific. If you take a look up and down the Zacks industry rank, you'll find all the different semiconductor groups in the top third. This one in particular, the equipment and testing group, this is in the top 3% of the Zacks industry rank. It's the number 9 ranked out of 265, so we're in the right space, okay? Now, this company in particular, what I always like to show here is the price and consensus chart. And there's been a long period of time of them having earnings beats. That's what those green arrows represent. And the earnings estimates going up. But take a look right around here. Look at the slope of the line here in terms of the earnings estimates, just exploding higher. Not surprised the price of the stock is exploding higher. This is the kind of earnings momentum that we Zacks rank people want to hitch a ride to. I believe that there's plenty of room to the upside on the current beat and raise earnings announcements that have already taken place. I'd see the stock around 80 on the current information. If they keep up this trend, it could be easily 90, even touching 100 this year if they keep up this beat and raise tradition. So that's why I'm riding MKS Instruments.
All right. Speaking of hitching a ride, the wheels on your company seem to be turning pretty well.
That's right, Terry. We're looking at American Axle and Manufacturing. AXL is the symbol here. And this company just had a pretty nice earnings report, and analysts are moving their estimates a lot higher following this release. If we look to the chart right here, we can see that the earnings estimate for the full year was $3.12 60 days ago, and now it's up to $3.41. But even going beyond that, the most accurate estimate is $3.46. So all the most recent estimates for this stock have been higher, and we see a similar trend in the next year time period too. So some really great things you want to see here, especially with a Zacks rank number 1, and then also a VGM score of A. And I know, Steve, I know you're a big value guy, so you might actually like this one. We've got a A score for value on AXL, and that's thanks in part to its low PEG ratio of just 0.73. We get a PE ratio below 6 for this company, and that's less than half of the industry at large, and an earnings yield approaching 17%. So there's a lot of good fundamental factors to like. The industry at large is also in the top third. So you got a fundamental score of A, you got a Zacks rank of 1, and a top industry rank as well. So a lot to like about AXL going forward in 2017.
And yeah, if I read correctly, record revenues in 2016, and then on pace for more record revenues in 2017.
Yeah, strong car market definitely helping this company, and that looks to continue.
All right. Well, thank you both. Do each of you maybe own this stock?
Do not.
Either of you?
I own MKSI.
Okay. All right, well, thanks for that. Don't forget, you can find more information on these two companies and many others on our website, Zacks.com. All you need to do is start with the homepage. There is where there's a lot of information that you can link to, commentary, stock picks, stock picking strategy, and then move through the site from that point on. With Steve and Eric, I'm Terry Ruffalo.